Want to ride the AI revolution but avoid the chaos of overpriced tech stocks? Warren Buffett, the Oracle of Omaha, has a secret weapon: energy. With AI eating up electricity like never before, Buffett's sitting on $334 billion in cash, I believe ready to pounce on whatever powers it all. And he's tapped into energy guru Greg Abel to lead the charge. Now, in this roughly 10-minute deep dive, I'm going to break down Buffett's bet on energy, why AI is fueling a power crisis, and how investors like me are tapping in using energy, specifically oil drilling. So you want to get in early. Let's jump into it right now. What's up, guys? Ben Oberg back with another video. On my channel, it is all about investing, building up assets, building wealth, paying low taxes, and learning the high-level institutional grade strategies without being an institutional investor. So if you're not already subscribed, make sure to smash that subscribe button so you stay updated on all the wealth building videos that we drop here in the channel. So Warren Buffett isn't chasing hype. He bets on what the world actually needs. With $334 billion in cash and Berkshire Hathaway energy in his portfolio, he's positioning himself for the AI-powered future. In May of 2025, he actually announced that he's stepping down as CEO, naming Greg Abel as successor, a guy who has been running pipelines, renewables, and utilities for literally decades. Abel knows energy investing like Buffett knows value investing. This isn't just a handoff, it's a specific, calculated, intentional move to dominate the energy space as demand explodes. AI isn't just smart, it's power hungry, so all the libs with their green energy and their windmills and their solar panels aren't enough to keep up with AI. From the early days of Turing and Eliza to today's ChatGPT, one thing has become very clear. AI runs on massive amounts of electricity. Data centers powering generative AI used over 4% of the US's electricity in 2022 alone, and by 2030 it could hit 9%. One ChatGPT query uses 10 times the energy of a Google search. And one data center, it draws power like 80,000 homes. The grid is straining and Buffett sees the writing on the walls. Whoever controls energy controls the future of AI. So how's Buffett playing this? He's already deep in energy. Chevron, Occidental, utilities, pipelines, and here's where my personal strategy comes in. While I'm bullish on energy overall, I invest directly into oil drilling. And I'm not talking about stocks or the paper asset, I'm talking about actual oil wells, where they're pumping out oil and they're pumping out natural gas. Every time you drill for oil, you get natural gas as a byproduct, and that gas is what's powering AI data centers around the clock. Solar and wind are great, but natural gas is what keeps servers running at 2 a.m. when there's no sun. With the US hosting 45% of global data centers, demand is only rising. Buffett's building long-term strategy and infrastructure. I'm leveraging oil drilling for the gas. Same playbook, different approach. You've got the Permian Basin, you've got the Bakken, you've got Cherokee Shale, you've got all of these areas in the United States, virtually almost every single state that has oil, natural gas, or both. Drilling for natural gas and oil is one of the biggest tax deductions in the IRS tax code. That, along with real estate, are plays that I go into because when I invest directly into oil drilling, I get high cash flow, and I'm usually in these opportunities for 3 to 5 years, where I'm getting 18 to 28% cash flow, but I'm paying very little taxes on the cash flow, so the effective returns are much higher than, say, investing in the stock market, going into an insurance product, getting an annuity, or making 15, 20, 30% on the stock market. I'm getting way more drilling oil, and the IRS rewards and incentivizes investors like me to be able to do that. Buffett knows that. He's just playing from a different angle. You can get involved in oil drilling yourself, and in a little bit later on in this video, I will tell you exactly how, because the cash flow is great, the tax incentives are great, and then when we exit, we get a big payday, and then we just roll it over and we keep doing it again on repeat. By the way, guys, if you're loving this so far, make sure to smash that like button. And now, let's talk about money. The US tax code is built to reward energy investors, as I said just a little bit earlier. When you invest in domestic oil and gas, you get serious tax breaks. Intangible drilling costs alone allow you to write off as high as 80% of the investment capital. Then there's what's called the depletion allowance, which allows you to deduct 15% off of your tax basis for every dollar in cash flow you produce. And unlike real estate, where oftentimes you're looking to make plays before the end of the year from a tax perspective, you maximize your taxes the most when you're investing in the beginning of the year with oil, because you can write off a large portion of that investment capital. And then when you start producing oil and natural gas, you're able to write off the cash flow, and you set yourself up for a very nice exit. Here's the secret to this. When we're participating in oil, we're going into areas where we're chipping in a little bit of money with other operators, say in Texas or Oklahoma, where there's very efficient horizontal oil drilling practices. And so if you've got the mineral rights, or you own the mineral rights, or you're leasing the mineral rights, or you're participating with somebody like myself that's going in and pooling together money in an area like that, every bit of oil that comes out of that, every bit of natural gas that comes out of those wells, you're getting a little fraction of, and that's paid in cash flow. But what happens is when wells start producing oil, they typically are the most efficient in the first year, then a little bit less, then a little bit less, then a little bit less, and then they level out, and it gets very predictable what's going to come out. So we literally take that predictability and we sell it to another operator 3 to 5 years down their line. So we get cash flow that entire time that is heavily tax deductible, and then when we exit, we get a big payday. And just like real estate, you can do what's called a 1031 exchange and roll those profits into the next oil deal, so you can defer the taxes while continuing to take advantage of all the tax deductions you get on the cash flow. And let me know in the comments real quick, have you guys ever participated in oil drilling or active oil wells, or only maybe owned the stock? Let me know in the comments. So I believe Buffett's thinking decades ahead, which I don't know why, because he'll be like 143 by then and probably dead. AI is projected to be a $15 trillion market by 2030. He might not be here, but none of it works without energy. With $334 billion ready to deploy, he's likely eyeing more pipelines, more power, more infrastructure, more gas, and his approach is simple. Build a legacy, buy essential assets, hold forever, and profit while others panic. Now, for you, that could mean exploring direct energy investments, like oil drilling, which would allow you to ride the natural gas wave, fueling this entire revolution. Energy is the foundation. Buffett knows it, so do I, but the question is, do you? So here's my take, guys. Oil typically costs $25 to $30 a barrel to get out of the ground. So when oil is trading at $60 to $70 a barrel, which I'll admit is a little bit low right now, it still leaves plenty of margin. Plus, you have to see the increased demand now that we're back into trading, now that we're building a very strong economy. And the secret here right now, over the next 3 years, I believe that oil is going to stay at that $60 to $70 price point. The demand is there, but what's happening is natural gas is getting a premium. So when you invest in areas where there's a natural gas byproduct, and it's highly refinable natural gas, you're getting a premium for that natural gas, even though oil is not as high as it could be. So that is increasing your profit. And when you've got natural gas that can be refined into methane, butane, propane, and all these different grades of gas, it allows you to get more of a premium than the standard price that you would normally get paid for that natural gas. So I invest in areas where we've got that premium, we're getting that natural gas, and we're getting that oil out. And this is what I do inside the Capitalist Network. Teach you guys how to build real wealth with hard assets, getting 2 returns simultaneously with the same dollars. And if you want to find out more about that, just go to thecapitalistnetwork.com, or you can partner directly with the multimillionaires and billionaire investment partners that I have. Get access to their funds, their opportunities, their mentorship, our investment strategies, all at thecapitalistnetwork.com. Appreciate you guys. Make sure to subscribe, and I'll see you in the next video.